Welcome to another video. This is Jordan with Simple Trading, where I help traders understand both concepts, complex and simple, and make them digestible. And that way you can understand them and be effective in the market. Okay, so in this video, I'm going to talk about a means of communication, I should say, and involvement that you're going to be constantly doing in the market. And it's a fundamental concept, and that is called a broker. What is a broker? You're going to be making transactions with your broker, right? And so I want you guys to understand the importance and what it is, so you have a fundamental concept of how you are going to be buying and selling in the market. So what is a broker? So a broker is an investment account that allows you to buy and sell a variety of assets such as bonds, stocks, mutual funds, and financial contracts. So as forex traders, you're going to find that doing we're going to be dealing with what we call CFDs. Means contract for difference. So we're going to be dealing where for example, Euro USD. That is a contract, a CFD, a contract for difference, because we are basically buying a contract from the broker and basically saying, "Hey, yo, we're going to buy this contract because we are projecting that this market is going to go up." And so basically, we are buying a contract and we either making money or losing money on the difference of where we projected the market, where we bought the market at, excuse me, to where the market goes, right? Whether that is correctly in our direction that we projected or whether that's incorrect in our projection. And so that's what a contract for difference is, a CFD. So we're going to be dealing a lot with that. Also, you will find that as you join my calls and my sessions and get involved with my signals, we'll also be doing, getting involved, and you'll be able to also take trades not only with CFDs, also with commodities such as gold, silver, U.S. oil, indices, which are basically sectors. They're collections of sectors of the market. So basically, you have things like U.S. 30, UK 100, Nasdaq 100. These are indexes, basically. So, for example, US 30 would be considered the top 30 companies in US Wall Street. And so you can basically trade that as a collective, right? A conglomeration. And we'll also be trading things crypto, things like I trade every now and then. I'll be giving out trades for Bitcoin or Ethereum, maybe XRP, right? And so basically we're going to be making these transactions through our broker. Okay? So again, what is a broker? But before I get into that, I do need to do a quick disclaimer. And that is, I am not a financial advisor. Okay? So these videos are my personal opinion, my experiences in the market and life, and research. Investments in the market are subject to risk. Okay, it's video solely for educational purposes only, and to provide information that is not intended to give advice. Information shared is personal opinions only. Whether any brokerage name, asset, trading asset, or platform is mentioned, this is for educational and informational purposes only. Okay, guys, so please note that investments, guys, can be risky. So please take professional advice, okay, before making any decisions in the market, okay? I'm going to be here to educate you, but know that you are taking on the risk. So please take professional advice for investing in trading in stocks and or other instruments such as forex are subject to market risk. Please consult your financial advisor before making any investment decisions. Okay, I'm glad I got that out the way. And but let's talk about this. A broker. So you, as the buyer, this little guy here looks like a normal guy who's about to go to his 9 to 5 job, right? You're gonna say, "Hey, man, I'm excited. I'm excited. I want to get involved with trading. I'm ready to learn the skill. I want to get involved. I want to start trading the market." And you're gonna be dealing with this guy. Back in the day, he used to be this guy. this guy was selling, right? This guy was the guy, he was the middleman, right? He had access. This guy had access to the financial institutions and exchanges, right? And so basically, you would talk to this guy as a buyer, hit the seller, and this guy says, "Hey," he goes and talks to the exchanges and the institutions, and these entities, the exchange institutions, are the ones that actually hold the assets. They're the ones that have all the assets. And he says, "Oh man, I got this guy. I got this guy. His name is John, and he's looking to buy about 100 shares or 100,000 units of this stock or this CFD, right?" And the institution say, "Okay, well, here you go. This is how much it's going to cost." And the broker says, "Great, thank you for doing business." And a broker comes to you and says, "Hey, I got access. I'm going to give you access to this stock, or I'm going to give you access to gold. I'm going to give you access to this particular trading asset that you want to buy. It's going to cost you this though. Okay, for this price, I'm going to get you in, and it's going to cost you this." And you say, "Great, I'm ready to get in, right? I'm ready to start trading." But here's the thing: you're excited now. You're ready to get in the market. You're like, "Man, this is awesome." And now, as you can see, this lady, she has a laptop, right? So back in the day, you were dealing with this guy. He dealt with the institutions. But now, today, modern day has changed. We don't have to necessarily go to this guy. We actually have a computer now, right? And everything can be done online. So we don't have to go to this guy anymore. He's kind of this guy is out of the question. Oh, I'm sorry, not this guy. This guy. No longer needed. So now we are trading. This guy is no longer the guy you got to see as the broker. The broker has now become this. It has now become the matrix. So instead of you going to that one guy and he's running on the floor, "Hey, I need 100 shares, 100 shares of gold, right here." And now you could actually access a website, go online, sign in, sign up an account with a brokerage firm, and basically start trading. And so now the trading has become algorithmic. It has become, you're trading basically against the AI. Of course, the man has created it, but now it's become machine learning, right? Machine learns basically how to trade against you. So it is important that you learn how to trade, learn the skills, so that way, even with the machine trading against you, you understand where the pivotal areas that the market is going to move, because the machine is programmed, right, by the entities, by the institution, by the money makers. And when they're ready to go in their direction, the machine is going to go with it. And so there are actually pools of the market that I don't really hear too many people teach about this. There are actually pools. There's actually three pools, right? There are three pools of the market. There's one pool where they put traders in this pool of people who win. There's a second pool of people that they put in the market who always lose. And there's another pool of people who see they put in the market who always go kind of up and down, up and down. And so you'll see that uh, the algorithm starts to put these people in these certain pools. And so you'll start to see, okay, it'll start to help determine what kind of trader you are, and you'll start to have advantage in the market more as you're kind of put in a better pool, right? But regardless, you still need to learn the skill because you are trading against a uh, an algorithm now, right? It's very powerful. But again, you don't have to go to that middleman guy anymore. You can now access trading online, right? So there are thousands of online brokers, right? So it's gonna be very difficult for me to actually recommend you a broker, and actually, legally, I can't do that. But as you join my calls and my sessions, and as I begin to launch those and give access to my signals and sessions, you'll be able to get online with me, trade with me, in real time to my analysis and the trades I'm looking for. And you'll get to, I'll say this, I'll share my broker. You'll get to kind of see what broker I'm using. And then it'll be your decision to determine, hey, I like the broker Jordan's using. I might want to use that. Or you can do the research and you could actually use the broker that you prefer, right? So that's simple as doing a Google search or using your preferred search engine, right? So you can use your preferred search engine. As I said, there are thousands of online brokers that you'll be able to search and have access to and be able to make your decision on which broker you want to get involved in. And some brokers you can sign up for as little as $100. There are actually even some brokers which I didn't mention in my presentation that you can actually even sign up for $1, right? I've actually seen some traders turn $1 into like $100, right? So you'd have to do extremely small lot sizes, but it is definitely possible. Now, there are a few things that I would deem important for you to understand and to be aware of looking out for when you choose your broker. And number one, that is regulatory compliance. And so, what does this mean? That means you want to find a broker. You want to find a broker that has good reputation in the market. Now, some brokers they might not be regulated. Now, there are times that I'll be honest that I do use non-regulated brokers, especially if I'm trading something like binary. There are times I don't use regulated brokers. However, I build a relationship with the brokers and I follow their guidelines and their rules so that way I'm able to effectively withdraw and things like that and I don't have any issues, right? But of course, I have to always be aware with the times as time move on because these brokers at any minute could get shut down. They could just stop working. They could take my money. So I want to make sure that okay, when I make a profit, I'm doing certain things. Okay, let me be having backup plans how to move my money and things like that. Now, um, so there are some advantages and disadvantages, right, to non-regulated brokers because you might some regulated brokers you might not have certain access to do certain things you might not have as 24/7 access on let's say a not on a regulated broker or you might not or you might not you might have to do a minimum deposit which is maybe greater than what you want to put in on a let's say a regulated broker where we're a non-regulated broker. Let's say you're able to start with $500, but let's say a regulated broker they're like hey you need 3,500. So you have those kind of things where you can kind of get in the market a lot easier, especially as a beginner, um, in trading, right? But if you do get involved with a non-regulated broker, these things are important. And even with a regulated broker, you wanna find out what is their reputation, right? Look at the BBB if you need to. Look up their regulations, their policies. Look at the terms and conditions. You could do some research, look at reviews and things like that. So far as their reputation, to find out, okay, is this a company, a broker that I want to get involved with? Another thing is you want to find out, okay, are they registered? Are they registered with the FTC or the CFTC? Are they registered with the NFA? Are they registered, with these financial compliant organizations, right? Now, some regulated ones, non-regulated, excuse me, will not be, right? But there are some non-regulated that I've used that they might not be registered, but they have good reputation, right? And so those are things you want to look out for. Another thing is, so the last thing I want to say about this is, again, if you could use an unregulated broker, know that that is a risk you must be willing to accept, right? So again, like I said, have a backup plan, have a plan B. Okay, so regulatory compliance. Next thing I want to talk about is leverage and margin. You want to look at okay, leverage and margin. This is going to be effective for you, especially if you are starting out with a small deposit, right? And you want to flip in an account, or you just want to kind of maybe an aggressive trader. So leverage and margin, right? And so let's talk about leverage and margin. Now you'll see that there'll be different types of leverage and margin. There are 30 to 1, 50 to 1, 100 to 1, 500 to 1. There's some brokers they'll even offer 250 to 1. I've seen some where it's 1,000 to 1. But these are normally the standard, right? That you'll kind of see in a lot of brokers. In a lot of my accounts, I like to use 100 to 1. Now, if you're a strong swing trader, a position trader, I've seen people use 30 to 1. Now, what does this actually mean, right? What does it actually mean? So let's take 100 to 1 leverage account, right? What does this mean? This means that if, for example, you have 100 times buying power, meaning that if you were to have a $2,000 account, let's say that you deposited $2,000 into your account, this means that you will have the buying power of 100. You'll have 100 times buying power of $2,000, meaning that for $2,000, you'll have the buying power of 200,000. Okay, so this is very powerful if you are trying to flip an account. Let's say you only started with $10, right? So 100 times buying power, you'd have the equivalent, what is that, $1,000 buying power. So now you can use that leverage and that margin to flip your account. So maybe you can take that $10, excuse me, to $1,000. In let's say a couple of hours or so. However, you could also blow that money, right? Just as quick as you can make it, and as much powerful buying power you have it's the same thing so far as you can. It's very volatile. You can blow that account very quick if you don't understand risk management, and if you are not looking at these pivotal levels to wait for the market to come, so you can minimize your error and your margins of risk, your stop losses. Okay. Now, so we talked about leverage and margin, and now another thing I want to talk about is commissions and spreads, right? And so you'll see that there'll be a bid price and an ask price. And so normally in your broker, when you're going to purchase a an asset, you'll normally see this. So let me show you this in practicality. Let's go to one of my charts here. Okay. We can actually go to my broker here, and as you can see, I have some trades running right now. But let's talk about the bid and the ask price, okay? So I'm looking at GBP USD, right? And if you were to come up here and look at GBP USD, if you look all the way to the right hand side, right? If you look to the right hand side, you'll see that there there's a whole column of numbers, right? And right here was highlighted. If you look here, you see there's a bid price, and it says 1.29076, and its ask price 1.29084. And you'll see that this is constantly moving, right? And you'll see there's a spread next to it, which is the number 8. Leverage is 100 because that's my account leverage, and pretty much we have some other numbers. If you go over day high, day low, so it shows you how high the market went for the day, how low the market went for the day. However, we're looking at the bid and ask price. So meaning that right now, as we're doing this video, it's at a spread is fluctuating between 9 and 10 for GBP USD. Means that if I was to put in 0.01 lots, so actually let me move my web camera so you can see this. If I put in if I put in a 0.01 lot size, most likely, as soon as I get in the market, I'm gonna have to pay the broker immediately 10 cents. Let's see. So let's say I say this market is buying and I get in, and I just brought a contract. Okay, you're gonna see here GBP USD. I just got in, and see that 0.11 cents. It's kind of moving now, but you can see as soon as I got in, I owed the broker 10 cents. But as it moves, up and down, of course, that's going to change. So as it goes in my direction, if it goes in profit, I'll start to come out of this negative and it'll go green. So just as you just seen, for example, right, at point 0.01 lot size, right? If I was to put in a point 10, most likely instead of 10 cents now, it's going to be $1, right? Or let's say seven spread is 7. So it'll probably be 70 cents. So let's see, I'm going to buy a contract and you'll see right there, boom, 70 cents. See that? So that is what's owed to the broker. So pretty much when you get into trades, almost immediately you're going to see that you you're gonna see that you're gonna immediately be in the red. Why? Because you have to pay the broker this spread. And so this is the difference, right? Because what's basically happening is that spread that says 7 and 9 is actually the difference of the bid and the ask price. So 1.29064 to 1.29073, that is 8, 9 points. It's going to keep fluctuating. But that is basically how we determine. Um, that's how the broker determines the commissions and spreads, right? So the goal is for you is to find a broker or and also to look at pairs that are going to have a low spread, right? And a low commission. Now the commissions, you're going to have to see that with your broker and see what are the commissions um, that are going to cost you. Sometimes they charge commission for holding over the weekend. Sometimes they charge a commission for going to different market hours. So that depends. It could be like, it could be, 2% of the account. I don't know. It just depends. You got to look at your broker to see what are the commissions. So that way, when you get it in the market as you're going to profit, let's say you made $200 in profit, you want to make sure that commission is not most of your money. Because maybe I have that $200, maybe I had to pay the broker not only, let's say they're $10 for that, but maybe I had to pay commission, for maybe $5, or so $15, let's say total for a $200 for your profit. So you want to make sure that your commissions and your spreads are fair, and so that way your profit makes sense. Okay. Now the other thing I want to talk about is deposit withdrawals, right? So especially dealing with non-regulated brokers, you want to make sure that whatever you deposit in the account, right? You have the money for, of course. So find out what is the minimum deposit, right? Some brokers might allow you to deposit $2. Some brokers might say, okay, you need a minimum of $100. There's some binary brokers where they say, okay, you need a minimum of $100 or a minimum of $50, minimum of 500. So you want to find out what is the deposit that is required for you to actually start trading, and then what are the policies and guidelines for withdrawing. So once you made your money, what are the guidelines for taking your money out? You want to make sure that you can take your money out. If you got a market, you made $5,000, and a broker saying, well, you can't deposit that, you can't withdraw that money right now because we have some investments. Like, no, 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 no. I made that money. I should be able to withdraw my money. So make sure that you can, withdraw that money. And sometimes there might be policies, like there are some non-regulated binary brokers, for example, that will say, okay, well, you need to make sure you have twice the turnover, right? So meaning that the amount of money that you made in losing and in gaining, that before you can withdraw, you need to make sure that we've seen that you have basically a trading history and that you're not scamming the system, manipulating the algorithm. We'll make sure that you are legitimately a legitimate trader before we can allow you to withdraw. So some brokers might have certain guidelines, of course, to protect them, because they're in the business to make money. But at the same time, you want to make sure that you can be able to withdraw your money. Okay. And the last thing I want to talk about, second to last thing is customer service. We all need customer service, right? The last thing you want to do is get involved with a broker where you cannot get access if you have a problem. Maybe there's a glitch in the system. Maybe you can't sign into your account. Maybe somebody hacked into your account, right? Maybe something went down. you want to make sure that you can get over the customer service. Maybe something in the system you're just not understanding, right? So customer service is very important. Um, I know for me, before this journey as a musician, there's been times like I would buy sounds, right, from like a company, and I'm having a problem using the sound or installing it on my computer, and I'm trying to call customer service, and they don't have one, and it's like, oh man, it's like okay, so I made the decision. I was like, I'll never go back to that company. I'll never use the sounds again because like I don't want to be stuck with these sounds knowing I can't even use them because I can't get in touch with somebody to help me troubleshoot or resolve the issue. So you want to make sure that you have customer service um, in your broker so that way if you do have problems, they can be troubleshooted and resolved. Okay. And so again, so that's make sure that you have accessibility to your account. We'll make sure that you can customer service can make sure that you can be able to get to your withdrawals if there are any issues, right? So you want to make sure that you're protected, right? Protected with your account, protected. If there are any issues with your account, so far as glitches or hacks, right? So customer service, you want to be able to reach somebody to resolve those issues. Okay. Now, last thing we'll talk about is a trading platform. So now we talked about the broker, right? So the broker is basically the firm, the company that's gonna be selling you, right? That's allowing you access to buy, right, these assets. However, some brokers will actually have their own built-in platform. Some don't. Some you actually need to use a platform and then basically plug in to the broker of your choice. And so you would need a trading platform to do that. So for stocks, some guys that get involved in stock, here are some platforms that I have used. I'm not recommending, I'm not promoting any, but I'm just telling you there's some platforms that I have used that I have found successful. Things like eToro, Owanda, Robinhood, and Ameritrade, right? Now these are again strictly platforms. So you'd have to do research on some of these might deal or might not deal with a broker. So you might not actually own these assets, but you can still make money on these platforms, right? You can simply trade on them. When it comes to Forex, here are some brokers also that platforms that I have used and I found success. Pocket options, something like uh, where you're doing binary trading. Do trade is something where I've traded binary. Things like MetaTrader, right? This is the MetaTrader platform, right? Where you could actually trade. Okay, we have things like Trade Locker, which is actually now Trade Locker is actually the platform that you've seen me using, which is basically I used to use MetaTrader and I've kind of graduated to Trade Locker. I believe that it's a little more modernized and a little more user friendly, for my trading. Okay, so those are that's basically what you would need to know to get started and utilize your broker. Why it's important to you have a broker and you're gonna need a broker to trade, right? So I hope this video was helpful to you in getting started, and I look forward to seeing you guys on the more advanced videos and we really get into the skill of trading and you guys start making money. All right, guys, thank you so much and for tuning in, and I'll see you on the next video. Peace.